Hi, my name is Roger Schluter. This video is actually about when a bank looks at your loan proposal, and I know I did a video recently on what you should have in your loan proposal from a bank's point of view. And anyway, banks have problems with these parts of your loan proposal. And that's what I'm going to cover is the parts of your loan proposal that banks will cover a little closer because they have problems with them in general. So they will cover yours, they will look at yours with a lot closer than they normally would. So anyway, banks can differ in what they consider a good loan proposal. I mean, you'll see this variation from bank to bank. Some put emphasis on parts that they can deem, needed the most. What follows now in these sections of the loan proposal that banks may have trouble with or find difficult to understand. And I do have a video on the short business loan proposal, but please watch the thumbnail that says new and improved video, or the one that says the a short business loan proposal new. So anyway, because the other one was the first one I did, and it was not. Yeah, I'm sorry, it's not up to snuff, but it does have the information. So anyway, number one is financial projections. Bankers do not like projections that are unclear, unrealistic, or lacking good assumptions. Now, it is important to provide detailed and well supported projections that have detailed assumptions on how you came up with the numbers. And that's what the assumptions are. It's assumptions of how you came up with those numbers, how you came up with that sales number, how you came up with those expenses. And they really want to know. They want details of how you did that. And I mean, hopefully it's not, I just dreamed it up. Hopefully it's based on real things, either, and it can be based on your knowledge in the industry. It could be based on, you've researched the industry and this is what you came up with. But you do need assumptions for all the numbers that you put on the projection. And you will have to show a couple years projections usually. And those are, basically just the P&L projection, just the sales, expenses, and net profit. So anyway, the banker needs to know that you have a good handle on explaining the business revenue sources, the expenses, and the growth assumptions. So anyway, the industry analysis. Your proposal needs to address the key industry specifics, the risks, and the challenges in that industry. The banker wants to know that you have a good understanding of the market and the potential risks with that market. You need to include information on trends, competition, and growth prospects. Number three, the use of funds. Bankers need to know how the loan proceeds will be utilized. They want the use of funds to be specific and detailed, a specific and detailed breakdown. Bankers want to know that your loan will be utilized effectively to meet the borrower's objectives. So that's another thing they really want to look at is the use of funds to make sure they're in a line with what you want to do. Number four is the loan repayment, and you'll include some of this on your projections. The banker wants to understand the loan repayment structure, specifically the proposed repayment terms, including interest rates and repayment schedules. These need to be clearly explained and aligned with the borrower's cash flow projections. Now, of course, the bank is going to go ahead and give you his own interest rate and his own terms and everything else. But they, for those projections to work, they really want you to have those numbers in there and good numbers. I mean, not something that's dreamed up, but ones that are actually used in the current market. And you can get these from that banker, or you could get them from somebody else that if he's in the banking field, he should be able to answer that. Number five would be collateral evaluation. Collateral is almost always offered to secure the loan. Bankers need to assess the value, marketability, and risk of the asset offered as collateral. Bankers can have a problem if the collateral is hard to appraise or has limited liquidity. Bankers are relying on this collateral to repay the loan if you cannot. And that's the bottom line. I mean, they have to have enough collateral to repay this loan if you cannot. And usually to a banker, there is no, the more collateral, the better. So number 6 is risk mitigation. Bankers like borrowers who understand the potential risks in their industry and give methods or to lessen those risks. Bankers want to see contingency plans that address the risk factors. Bankers are obsessed with mitigating the risk of your loan. They don't want any problems. They don't want you to give back the keys and say, "Here you go, man." They really don't want that. They really want you to work it out and make it. So they really like when you have looked at those risks and you've looked at, you have contingency plans that, can address those risks. But that's one of the things that most businesses do not look at, I guarantee it. The bank wants you to have a well-structured short business loan proposal that provides clear and comprehensive information. Always includes supporting documentation such as market research, financial statements, and projected financial statements, cash flow projections, and asset appraisals. Frequent communication with the banker will alleviate most of these problems and will clarify any questions or concerns the banker has in the loan process. I can't say this enough, but there's a lot of people that they just do their loan proposal, they give it to the bank, and then that's it. A lot of times when you give that proposal to the bank, if you have any questions, you have any doubts, or you have any questions that you'd like to ask the banker about that, that's a good time to bring it up and get these clarified. You're not, you don't do this very often. Chances are businesses do this, once, twice, maybe 3, 4, or 5 times, but they don't do it like every month. Maybe every year, every couple of years. So anyway, and they could, if they did short-term loans, they might do them a lot more. But yeah, that banker is your, he's supposed to be your bud, your friend. If it goes bad, he won't be. But anyway, he is in the beginning. He is your friend, and he is your buddy, and he will do anything because he wants to make the loan. So anyway, ask him any questions or any problems you have or anything whatsoever. Please subscribe and hit the bell for future video notifications. Also hit the like button if you really learned anything in this video. My name is Roger Schlueter, and I will see you in the next video. Thank you very much.